Well, folks, I think we've all seen it. If you follow me, Kevin, 238,000 people have seen it so far. He sold out of everything, sold out of all his stocks, sold out of cryptos, and has even went short the market now, he says. And I have gotten literally hundreds of comments in the past 24 to 48 hours on my opinion on Kevin's move here. That, I can't even explain how many comments I have about this. And the reason being is Kevin is one of the four amigos on Millennial Money, right? And so being that he's one of the four people on Millennial Money, and a lot of folks watch Kevin's channel, also watch my channel, everybody is looking at this and like, Jeremy, what are you going to say about this? Or do you agree with him? Do you disagree with him? Are you going to sell out of your stocks? Are you planning on making a move like this? And so, yeah, nonetheless, we got a lot to talk about in this video here today, guys, because this is an action-packed one. This is a crazy one, okay? So, first off, Kevin is getting massive hate, and I'm not just talking about from random people. I'm talking about from his audience. You know, I don't know if I've ever seen it in the finance space where, we've gotten something like this, and people are pissed, okay? I would describe it as that. As a YouTuber, right? As a YouTuber, you're always going to get a certain amount of hate or negative comments or people that watch your channel who don't like you and those sorts of things and say mean stuff. And that's going to happen, right? But the thing is, that's usually a very, very small amount. If you go through Kevin's, comment section on that video, it is a disaster. It is like almost every single comment is like negative, negative, negative. People are, very despising of Kevin right now. And I think if Kevin was realistic, with himself, which I think he is, I think he understands he deserves the hate right now, right? Because, Kevin's built his brand off of, if people sell stocks, he says they're weenie babies, right? And that's like his thing. And then he says, he made a video last week about Bill Ackman shorting the market and how Bill Ackman's so evil and all these sorts of things, right? Which got a crazy amount of views. And so Kevin's gone out there and he's attacked and made, called people names that sell stocks and then, made people that short stocks look really bad. And then Kevin goes from, being very bullish buying the dip to all of a sudden in a matter of 24, 48 hours to selling everything and then shorting the market. That's a whole different situation. So nonetheless, people feel like they got backstabbed in this situation, right? Where it's like, really, you're just going to make a move like this. And so, I wish Kevin would have spoke to me about this, before he had done it, because I would have told him, dude, you got to realize how bad this makes you look in this situation. And if Kevin had just, maybe cashed out of some positions, right? And let's say went a little more cash heavy, I think he would have gotten a little bit of hate for that, but it wouldn't have been that much. It would have been like, okay, that's kind of weird. You were buying all these stocks, and all of a sudden you sold a bunch of them. But if he still held certain stocks, it was like, okay, give him a pass, right? But when you sell all your stocks, that's a whole different thing, especially when you were, talking about how you were bullish and you were buying and all those sorts of things, to all of a sudden sell everything all overnight. And people are like, what? And then the shorting part, or going negative on the market, making bets that the market's going to go down, that is the last kind of lever, to make people go really, really mad at you. And so Kevin is getting crazy hate right now. And I think Kevin would be honest and just say he deserves the hate right now because, yeah, you can't build your brand off of certain things and then do that. That'd be like me all of a sudden being like, I'm a day trader now, guys. I'm day trading stocks. Here's the candles, and it's like, no, okay, you don't do that. Okay, so that's the first part I wanted to bring up here. Okay, second part, that I think is very important. Then we're going to get to a lot of market metrics and talk about, is this a smart move? But we got to address the Kevin stuff first, okay? The hate from the audience. And also the journey Kevin's been on, right? In January, Kevin's been very, very open with his financial situation over the years. And that's great, as, most YouTubers are. And I think that's awesome, okay? But you got to remember, Kevin, a couple years ago, January 2020, he went from a guy that probably had, 6 figures in the market, I would say, in terms of stocks. I could be wrong about that. Maybe he had 7 figures. I think it was 6 figures at that time, okay? So maybe he had a few $100,000 in invest in stocks, and he was a guy that was doing well for himself, right? Had investment properties, had a good amount of money in stocks, and it was like, hey, you're doing well for yourself, had a successful YouTube channel, was obviously doing his thing in real estate. And then obviously Rona came and he pivoted and his channel went crazy and that is phenomenal for him. He was getting 1 million, 2 million views a day. It was insane. The stimulus check stuff and everything. And so he made crazy, stupid money, right? And then he, to his power, he invested everything. He was flooding it in the market and he made his money into more stupid money, right? And so he went from a situation where he was a guy that was doing well for himself to let's call it stupid rich in a 2-year span. Now, a lot of problems come with going like that, right? You might think, oh, that's just great. You went from doing well for yourself to stupid rich. Well, you gotta understand when it's not gradual and it's not like you leveled up and you just went from, level 3 to level 100 like overnight. You got to understand that brings a crazy amount of stress when all of a sudden you're trying to manage a $20 million plus portfolio when you just a couple years ago maybe had 100,000 or a few 100,000 in the market. Okay, that's going to lead to a lot of stress. Now you got to navigate these markets with a crazy amount of money in the market, right? Then we know Kevin, he's been very open about using margin. If you add in margin to this whole situation, you would throw in another dynamic. Because if all of a sudden you've got 20 mil, let's say, of your own money, and now you're 10 mil in margin or something like that, my gosh, okay, things can get messy really, really fast, especially when you didn't have a gradual kind of move up over time. And it just was like all of a sudden, you got like crazy rich essentially, right? We know Kevin likes to, use options. So that increases another market dynamic where all of a sudden you've got crazy money in the market. You got margin, you got options. Taxes start getting really, really complicated. And all of a sudden you get these huge tax bills that are owed to you. And it's like, oh my gosh, all of a sudden I owe ... amount. Shoot, man, where I got to pull that money out of? And what if you need to pull it out of your stock account? Because let's be honest, most people, what they do, if they sell stock for a gain, they don't pull the tax money out right then, right? They say, I'm going to go ahead and invest this now. I want to make this money into more money. And so then all of a sudden you end up in a messy tax situation. And you add on top of all this, you're in the public eye, and you went from, an up and coming YouTube channel a couple years ago to this massive YouTube channel now, right? Then all of a sudden you're in the public eye. And so when it comes to kind of Kevin's journey, it hasn't been gradual. It's like, whoa, through the roof overnight. And when you're dealing with all that, you're gonna have a lot of stress on your shoulders. You're gonna have a lot of, oh my gosh, type situations that essentially go on. And the thing with Kevin is he's definitely one of those that can maybe make a little more of, let's call it overnight decisions. And, that's all of a sudden he was running for governor of California. All of a sudden he, pivoted his YouTube channel towards stimulus check videos and those sorts of things at that time. Then he pivoted toward news. Then he pivoted toward, the election stuff. Then he pivoted toward, stocks and those sorts of things. So that's great. But at the end of the day, that's not a good mentality to have in the stock market. In the stock market, you really have to think everything through. You got to be very, you can't just make a rash decision and be like, I'm selling everything, I'm buying everything. It's got to be a very deliberate decision process. You got to really run through all the different scenarios over and over and over again. And it takes time. You can't just make these sorts of decisions overnight. When you're building wealth and you're running businesses and things like that, and I would even say YouTube, that's a great mentality to have, to be able to just pivot and be like, I'm going to do this. Because most people can't think like that. Most people can't think like Kevin and just be like, I'm going to go do this. I'm going to do it now. And heck, I'm going to be successful at that. Most people are like, would think it through and be like, oh no, I'm probably not going to be successful at that. Oh, I'll make stimulus check videos. I probably won't be successful at that. Whereas Kevin's just like, screw it, man. I'm going for it. I'm doing it. And that's a great mentality for building wealth and for specifically YouTube and content generation. But I can tell you in the stock market, that's not the best mentality that has. And with Kevin in this situation, even if he's right? Like, let's say he times this all out perfectly. Let's say he gets out of stocks, right now. Let's say the market tanks down another 10%, 20% over the next 2 months. He gets back in, then the market starts going up. Even if that happens, he still has put himself in a no-win situation because of the way he's basically gone about this whole situation. And so that's a tough part for Kevin, where he could be right and still be wrong, if that makes any sense. And so that's kind of the tough situation there, okay? Now, next point I want to make is when it comes to, investing, right? All the best investors in the world, they all they think alike, right? In terms of like, being invested in the market. Like if you see a stock that you think's a great deal on a long-term basis, you buy the dang stock, right? It's about buying the underlying business you're in and not thinking about it in terms of, is the stock price going to go up next week or down next week or up next month or down next month or up over the next quarter or down over the next quarter. It's fun stuff to talk about, right? And we can debate that and be like, oh, maybe Google's going to miss their earnings and Apple. That's fun stuff to debate and talk about. But to then go ahead and make buying and selling decisions based upon thoughts of, this could happen. Oh, maybe this happened. I think that's very, very risky. At the end of the day, if Facebook you think is a great price for the next 5 years, you got to hold that stock. You got to buy that stock. Just because they could miss their upcoming quarters or make their upcoming quarters, that's all ends up kind of being irrelevant in the end. And, if we think about what Peter Lynch, he says, I can't ever recall seeing a name on the Forbes list, richest people in the world. If it were truly possible to predict corrections, you'd think somebody made $1 billion doing this, right? And so that's the way, all these phenomenal investors think. And just the fact is, since my life began in 1989, every single buy the dip is an opportunity to buy the dang dip and make a lot of money, right? This is S&P 500 over time. It doesn't matter. All these dips along the way, you buy them. And even if you're in a downward process, you buy. I know I was on Millennial Money recently, and Graham's like, well, what if, this stock, Tattooed Chef, Honest, they go down over the coming years, right? I'll just keep buying them, right? If they go down over the coming months, coming years, I'll just keep buying them. As long as I'm confident in where their business model is going over the next 3-5 years, it doesn't matter to me what happens in the stock price in the short term. I'll just keep buying. I'll acquire more ownership of that company in the end, and as long as things play out the way I believe they're going to play out, I'm going to make a crazy amount of money in it. If I'm wrong about the business, which I've been wrong about the business a few times in the past, if I'm wrong about the business, I can accept that, right? I'll take my L and that will be that. But I never want to trip off of, short-term, price movements in the market or, oh man, maybe we could go down another 12% now, right? And those sorts of things, because the fact is, as long as you're buying along the dip and even on the way up, you make crazy money in the end, okay? And so I think that's very, very important to remember. There have been 27 corrections in the S&P 500 since World War II, with an average decline in the index of about 14%. The market has always recovered and returned to a new all-time high, sometimes within a few months, sometimes within a few years, okay? And so the fact is, when you get these corrections, and especially if you get a stock market crash, which we don't know if we're on for a stock market crash, probably more like a correction outside of a situation where we go into a massive recession, which I think is definitely a risk, but that's always kind of a risk that you got to be willing to accept, right? But the bottom line is, if you get corrections in the stock market, you've got to take advantage of those, because look at that. There's only been, you think, 27 sounds like a lot. That's 27 since World War II, okay? Since World War II. So when you get these opportunities, you don't get them very often. You get them every few years, and you've got to take advantage of those opportunities to buy stocks on the dip and as they're going down. And you never know where the bottom is, right? If you buy, Corsair stock, let's say you bought it on Friday at $20. It could go to 17. It can go to 15. It can go to 12. It can go to any price technically, right? It can also start going up. If you think Corsair's, going to be $40 or $60 3 years from now, does it really matter? It's like, okay, if I buy at 20, it can go down to 18, I'll buy some more. If it can go down to 15, I'll buy some more, because I believe this is going to 40 to 60 based upon where I think their net income is going over time and the type of valuation this company should be able to command in 3 years from now or 5 years from now, okay? So you got to take advantage of these. No, I got a friend named Brian, and Brian really gets much more into the technicals and those sorts of things than I do. Brian's one of the investors I respect the most in the market in terms of especially anything shorter term and kind of his thoughts, out there and things like that. And when it comes to Brian, he's somebody that I talk with, and as a lot of these stocks are going down, I'm like, dude, how are you not loading the boat in this stock or this stock? And he's kind of been like, I'm not looking to get really in the market till March, April. That's what he says, right? He's like, in March, April, I'll start deploying more money, and especially if ... lines up. But he hasn't been, flushing money out there in respect, because, if he had been flushing a ton of money out there, he would be down, a lot of these positions. So he's kind of stayed on the sideline. So it's one thing to say, I'm going to be a little more cash heavy right now, versus I'm going to sell out of all my stocks and go 100% cash, or dare I even say short the market, right? Those are really like Two huge differences there. And so, even there's certain times in the market I go cash heavy. I can tell you right now is not one of those times. I am deploying money left and right in these stocks because I believe I'm buying extremely cheap stocks for the next 3, 5, 7 years. But there's certain times in the market where I go much more cash heavy, right? And that's just when I feel like, man, I can't really find many good deals out there. And so that's kind of one thought process. But yeah, to sell everything is definitely a different process. The next thing we got to talk about is the Nasdaq started out the year horrible, right? The Nasdaq's down 12% year to date. Now, it doesn't mean it can't get worse. It could easily go 15%, 20%, 25%, whatever, right? But the fact is, we've had 3 straight weeks to start out the year where the Nasdaq's just been on a vicious downtrend. Now, as you start getting more and more of these down weeks, the odds of this continuing to happen start going down, more and more and more. And it becomes like, hey, we're probably going to get a bounce back week, or maybe several bounce back weeks, or maybe the whole market will bounce, right? So it starts to become a little unrealistic to continue to see activity like this, although it definitely can be possible. And so the risk you do if you do something like, QQQ puts or something like that is if all of a sudden you get a few week, bounce back here, oh my gosh, the theta decay on that is could be dramatic, right? Because you never know. We could all of a sudden bounce for the next 2-3 weeks and then maybe start another downward cycle after that or something like that. You never know what could happen in these situations. And so it's just, I would call it more risky to short stocks, buy puts and things like that when you're already in a pretty vicious downtrend, which is, something we're in right now. Okay. Now, here's another thing. I don't get a ton into the technicals and those sorts of things, but there's some interesting stuff going on right now. The sell-off in equity markets has volatility indexes pricing more turbulence near term than in the future. The setup known as the inverted VIX. Such an inverted curve has occurred 4 times in the past year, and all coincided with market bottoms. So I think that's another, kind of a little more dangerous point if you're going to short stocks and start buying puts right now is, if you want to do it back in November, fair play, but to do it now, you have a lot of stuff kind of lining up against you. Small caps are trading the cheapest they have since literally 2011, so over a decade. Over a decade, small caps are trading the cheapest in over a decade. Mid caps are right around the same when it comes to forward P basis. And so you have all these things kind of lining up from a fundamental perspective. I think there's always risk of recession, possibly. Elon Musk has talked about that and things like that. But at the end of the day, a lot of people always predict recessions, and then many times they don't come. And so that's some food for thought there. And also in terms of recession, sometimes it can take a while for that to play out. And sometimes the economic indicators are lagging. So if you're placing a short-term bet that the stock market's going to go down a bunch more, let's say over the next month or several months, it's possible that doesn't happen, right? So these are all factors to keep in mind. And also, if all of a sudden you get recession fears, well, guess what? Then the Fed's not going to likely raise rates. And so if then they don't raise rates and then all of a sudden they're like, well, actually we're going to flood more money out in the system, then you could actually get a big rally in the market. So that's where you kind of got to take all these things into account and think, man, I'm kind of playing dangerous here. Okay. Another point I want to make in regards to this Kevin situation is, he made this decision on Friday. And when I think about this, I'm like, sleep on it. Sleep on it over the weekend. Give yourself, when you're so caught up into a horrible week like we just went through, where this is a boxing match, we're like knocked out right now, just completely destroyed. And so if you're thinking about it from that context, it's like if you're going to make a dramatic decision, like I'm going to sell all my stocks and I'm going to go short the market or buy puts or whatever on the market, sleep on it. At the end of the day, on Monday, the market could be up, the market could be down, but I can tell you it's likely a much better decision to give yourself 48 hours plus to think about it and say, do I for sure want to make this decision, rather than make that decision all on a Friday? Give yourself some dang time. And like I said, you could say, well, what if the market goes down more Monday? Well, you can say, well, what if the market goes up Monday, right? And has a decent bounce back day. And then if you still want to cash out, you can cash out and you could be up a little bit versus where you sold out on Friday, right? It's never good to sell out when you're already getting destroyed. Just give yourself some time to sleep on it. Think about it. Make sure you make a calculated move. And if that's the move you want to make, then make that move, right? Okay. Now, next question I get is why won't I make a move like this? Sell out of the chef, sell out of honest stocks like that. I've been getting destroyed on these stocks, down 30% on the chef right now. Honest, I'm down 27%, been buying that stock very heavily. And people are like, why not go ahead and sell out of these stocks? Because they're just downtrending. They go to new 52-week low after new 52-week low. the chef's at 12 right now. What if it goes to 9? Okay. Honest is at 5. What if it goes to 4? What if it goes to 3? And those sorts of things. Okay. And so I want to kind of give my point. By the way, make sure you check out the pinned comment down there for 5 free stocks valued up to $3,500 from Moo. That's a pretty good deal, and get those stocks while they're still free out there, guys. Yeah, enjoy that. Okay. So the reason I don't make a decision like that is, at the end of the day, I think the chef's a stupid deal right now. I think it's based upon where I see their net income going over the next 5 years, I think I'm getting great pricing on this stock, beyond great pricing. Like, I don't want to call it easy money, because I never want to call a company who's technically losing money on the bottom line. I don't want to call them easy money, but I think I'm going to make some pretty stupid money on that stock over the next 5 years. Honest is at $5 a share. It's ridiculous. Okay. Absolutely ridiculous. It's at a price to sales ratio of like 2 now. And, based upon where I think that company's going, that one might even have more upside over the next 5 years than the chef does. Okay. And so I look at those two stocks and I'm saying, if it goes down more, if the chef goes down from 12 to 9 and Honest goes from 5 to 4.3, I'll just keep buying. I'm not going to sell out of those stocks for them to all of a sudden start bouncing, and Honest is all of a sudden at 7, 8, 9, 10, or chef all of a sudden goes back to 14, 16, 18, 20, and then be on the sideline and be like, wait a minute. Should I buy back in now? That's the last thing I would want to do. I feel much more comfortable and I feel much less stress as long as I'm buying the dip all the way. And as it comes back, I'll likely even buy on the way back up. Okay. And that's kind of my name in the game as a long-term investor in, these sorts of companies that I love for the next 5 years or so. To me, selling out of those sorts of stocks and trying to time it out and get back in if it goes down a bunch, that seems very stressful, and that seems like more of a gambling decision rather than an investment decision at the end of the day. To say, we're downtrending bad right now. It might go down more. I'll get back in. Because when do I get back in? That's the thing. Like if it goes down to, let's say I get out of the chef. Say I sell it all, okay? Okay, sell it at 12. Okay. And it goes to 11. Do I buy back in at 11? What if it goes to 10? Do I buy back in at 10? What if it goes to 9? What if it goes from, down to 10, then bounces to 11? Is that a sign I should buy back in? Or should I wait then? Should I get it at 11.50? What if it starts going up from here and I sell, and all of a sudden next day the stock pops 20% and some news comes out, some earnings or something like that? Do I buy back in then, or do I say, wait, it'll go back down? And then it doesn't come back. That's where it becomes an impossible, stressful, gambling type decision for me. And I'm just like, I'm good. If it keeps going down, I'll keep buying, and then I'll buy all the way back up. And at the end of the day, as long as I'm right about the business, I'm going to make a stupid amount of money. If I'm wrong about the business and they don't build to the revenues I expect them to build to over the coming years, and they don't build to the net income I expect them to build to over the coming years, I'll lose money and I'll take an L over the next 3-5 years in those stocks. But as long as I'm right about what I see going on with the actual fundamentals underlying, I'm going to make a ton of money. And so that's why I try not to, get caught up into, those sorts of things and whatnot, guys. So anyways, hope you enjoyed this video. As always, much love. All the best to Kevin in this situation. I think it's a very, very tough situation that he's going to have to deal with in terms of his brand for quite a while, because people in the stock market, they don't forget anything. That's the thing. Like, people are going to be bringing this up years from now. Like, people still bring up failed investments I had from years ago, or positive investments I had from years ago that I even forget about. And all of a sudden I'll see a comment. I'm like, oh, dang, man, they've really been following me for that many years. They remember ... And, so anyways, much love as always. Let me know your opinion. Have a great day.